Rajeev Agrawal, good morning. I mean, how interesting is this? We've been speaking and talking and discussing and debating tariff. But if today's implied GIFT Nifty is anything to go by, we would go back to March end levels. How amazing is the strength?
Absolutely. I think the strength is good, but we also have to realize that President Trump backtracked on many of the things that he laid out initially. So I think the market has realized that it is driving President's decision to some extent. And I think it is a very interesting push and pull that is going on in the markets right now.
Rajeev, hi, morning. Many are questioning whether, this 90-day reprieve that's come in on tariffs, is that a full policy reversal or not? And I think that's sort of keeping the markets a little bit still in the limbo.
I don't think the markets will remain volatile. I think Trump has recently talked about he exempted some of the semiconductors and phones and all that. But he's saying, oh, well, there will be another tariff on semiconductors and electronics and so on. And the whole 90-day gap that he has introduced, or 90-day pause that he has introduced, I think is just going to create more uncertainty in terms of how the trades are, how the markets will react. So I think if there's one takeaway from all of this that Nikunj was talking about, and is that I think we are in for volatile times. Markets will move very aggressively on either side as there is clarity or the lack thereof with the actions of President Trump.
What should one do then? I mean, if you ignore tariffs, you know that that would be not a good idea to ignore the impact of tariff on your portfolio. But if you just make that as the only point for decision making, then you also refrain from participating in this market. So what should our viewers do? Understand the impact of tariff and assume that the worst is not over, or assume that the worst is over and start putting money to work?
So I would say that tariffs is really more of a sideshow, Nikunj. I would expect that even if tariffs come, and I was actually reviewing some information recently, even if there is tariffs, how much of that impact will be on Indian economy? And there is this study which says a 10% tariff reduces India's GDP by around 0.15% in 3 years. So really, tariffs are not going to have a significant impact in terms of how India's GDP will do. Now, in terms of the stock specific, clearly market moves much more aggressively than how the underlying companies behave in terms of the performance, in terms of the economic performance. So I would say the viewer should decide if they're comfortable with the volatility, because I think volatility will be there. But if you have the ability to take advantage of that volatility, I think it's a great time. So figure out who you are. Are you somebody who understands the business, understand the valuations, and therefore can go in when the market gives you good prices? Then definitely this is one of the more interesting markets.
So Rajeev, what is it that you've been buying here in India in the recent decline?
So actually, we have been much more focused on sectors which are domestically focused, because those are the sectors that are not going to be impacted as much. And the one additional thing on top of that are sectors where the valuation comfort has been there. And one of the things which we have talked about a few times has been on the lending side. So lending continues to be a sector which we believe should do well, given India's credit needs. The second sector that we actually like, and which has come up quite a bit in the last few quarters, has been capital markets. As the markets have come down, suddenly everybody thinks that the capital market players will not do as well. And so that is another sector that we like, which I think will continue to do well over the next few years.
Okay, Rajeev, good to be speaking with you. Thanks for your time as always.
Sure.
Okay, that's the word coming in from Rajeev Agrawal from DoorDarshi Fund India.
If you like this video, then like, share and subscribe to ET Now.